Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, July 19th, 2022. The NASDAQ, along with the S&P, did break and negate the triangle pattern, in my opinion, which brings us back to a pattern that still would fit within a minor fourth wave, which I still believe that's what the market is finishing. And that minor fourth wave will take an ABC structure, not a triangle pattern, which was an ABCDE. So again, remember that within a corrective phase, we have two choices, one being a zigzag, which would be an ABC structure, another being also an ABC, but more of a flat structure. And within that flat, there are 13 different variations, triangles being one. Triangle pattern was negated, but the ABC pattern is not. So we continue to look at that we're working a fourth wave up, but is likely now an ABC. We're in that C wave, and this is wave one, wave two, and we're in that third wave, which might be 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, and then we'll get a fourth wave again, and then we'll do a fifth wave of C, and that likely will start to bring us up towards 12,675, possibly higher. We have continued resistance, price resistance. 12,675 is Fibonacci. Price 12,800, 12,825, 12,950. So it all is out there. It exists. Now, here's something I want to add. Today's move showed on a money flow basis a lot of dollars being pushed into the market. Do we really want to sit and think about the who, what, where, when, or why? Because when I do, I'm not participating in the move, or I'm selling the move and likely I'm going to get my butt handed to me, or I'm going to have to wait and add to that short before I'm going to get a position or a possibility that we'll get a little bit of a pullback and I'm going to be able to get out of the position without dumping a ton of money. But I'm going to put a lot of money at risk, and I'm not going to be trading what's actually happening in front of me. So how can I sum this up? Two words that a good friend of mine brought to my attention today. And boy, it took me a while for them to hit home, but when they did, it was like turning on a 200-watt LED light. Now, what those two words are is looking at the market objectively or looking at the market subjectively. When you're looking at the market objectively, you're basically really just following the price action with an understanding, like market profile, that all that the market does on its ebbs and flows is that they're looking, buyers and sellers are looking for value to where they can meet, do their trades, and say thanks. Value areas and points of control shift all day long as the supply and demand comes in and out of the market. The money flow was in. That made the demand to buy stronger because it had to go somewhere, and therefore it was going into the individual component stocks, and that forces the index on a weighted basis go up or down. So to look at the market quantitatively, which is, again, nothing more than just algorithmically, which is what it is, and then a market profile, which is more than just supply and demand, ebb and flow, and where value can be established. There are tools and indicators we can use that give us those clues. They are using a volume profile, a market profile, which is going to include a point of control, value area high, value area low, and how they move and what is creating it. So with the concept of you can see the money coming in as you see them tick, the Dow tick, 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 as the stocks tick up, and tick up. So the demand is there. So you got your supply and demand going. It's on the demand side, and the supply side is going like, I've sold enough here. I'm going to move. So the sellers move up. So like, I'm not selling anymore down there. You need it. You're going to have to come up and pay up for it. And they do. Why would we choose to look at something subjectively then and not participate in that? We're day traders. Well, I am. And those of us that kind of do a lot of follow what I'm saying are a lot of times are day traders. Day traders, that's a goal. I just need to get in, make my money, say thank you, goodbye. I don't need to know who, what, where, when, or why. To do that, I'm missing the trade. So again, subjectively versus objectively. Subjective, and you got to find out why are they buying? Why are they buying Apple again? When the Apple talked about how they're making some changes, they're not going to hire the amount of people, they're not going to pay out as much as they did, et cetera, et cetera, et cetera. Took $5 off the stock yesterday. Why in God's name would they come back and do it again today? That hasn't changed. Okay. Or interest rates, we got that meeting next Wednesday. So, and they've already talked about they're likely going to have to do a much larger increase to really get a grip on inflation. So they're thinking about a point. What if that hits the market? Well, why would they be doing this now, et cetera? Meanwhile, they're still doing it. Meanwhile, they're still pumping it up. Meanwhile, the NASDAQ or the S&P have gone up another 10, 20, 30, 40, $50. Why sit on the sidelines when your goal is to follow the move, follow the price action, and make money? Okay, enough said on that subject. Think about it subjectively, objectively. Pick which one you want and then try to be happy with it. Now, what can the market do from here? Obviously, I believe that the market still has room to go up. I've laid out the resistance areas, and they've got a 4 and then a 5, and that completes wave 3. Then we have an additional 4 and 5 to complete wave C and to complete the minor 4. So I am still looking for a minor 5th wave down, and that still is the likely target. It will be adjusted. Once again, I get that 4th wave in, I can run again extensions to give us indications of where this 5th wave should come in. So still, I'm looking for it to go below 11,068. That's the area right now that I can say for sure I'm looking for it to go below that. Now, if the market should start to break down tomorrow from current levels, then it needs to, again, break below 12,217, which is now where the daily 50 is sitting. So it went up, it accelerated past it. Then we got the daily 8 at 12,151. And then we have 12,015, which is where the 8 is. We should continue to have support, but I don't think I want to see this market really go below 11,500 with still having upside intentions. I think then the supply and demand is switching, and that will also realize at that time that we're working our way lower, and now sellers are in control, and they're looking for that value where they can get out of these positions. So buyers will be like, okay, they take so much there. It's like, nope, they're not going to take any more. So the ebb and flow pushes it, and so goes the point of control. So goes value area lows and highs. All right, so both sides presented. Let's have a great trading day tomorrow. Let's attempt to stay in a mindset of looking at the market objectively and not searching for the who, what, where, when, or how, and just playing the price action. Our next update will be on Wednesday, July 20th.